Good morning, traders. Good morning, everybody. This is Cayman. We are February the 6th, Bank of England day. First of all, Ryan won't be with us today. He's feeling under the weather. Wishing him a speedy recovery, of course. I'm sure if it's just a big cold or so that he will be back with us tomorrow, but we will see. So I will be your host for today. There's quite a few things to go through. Overnight, some people talking. We had a few data out, and we have to talk about the Bank of England. So let's straight away kick off the debates. Um, First of all, let's go through some comments. We had Bessent speaking last night, and he seems to be the one now that has to explain Trump's policies, or at least trying to smoothen down the angles a little bit on what Trump is coming up with. So. Last night he spoke about him and Trump focusing on the 10-year yield, and in particular saying that the increased energy production will probably have a negative impact on inflation, and therefore will weigh on the yield. So he is again sending us to watch the 10-year yields as if we didn't know yet, but he's just reaffirming that they are closely watching it. He did find it necessary to add that they are not pressing the Fed to act. So that's an interesting one. Again, telling us that Bessent is more on the less hawkish side of things, compared to Trump and his closest team around him, I should say. That was the interesting thing of yesterday evening, out of the U.S. Treasury. He also had a chat with Ueda, but I didn't see anything in the details that would have been world shocking. Then there is we need to talk about just quickly about Trump's intentions in Gaza. It's really been how shall I say, rejected and strongly rejected by most countries, and especially in the first place the people in Gaza. And the White House press secretary Leavitt, she was rather fast afterwards to start to soften down this tone a little bit about what the plans are for the Gaza Strip. So it's still a very fluid situation, but she said that it doesn't mean that there will be U.S. troops on the ground, or it's for sure doesn't mean any deportation also, or forced deportation. But this is something that the world now is watching as well, because any too big involvement here could fire back on Trump and his administration right now. So we had a few Fed speakers as well. Barkin, Jefferson, Goolsbee, all very unsure about what potential tariffs may mean for the Fed going forward. And the main line coming out of there is that they are unsure about the net effect of US government policies. So we are none the wiser with those three at least. So we will be waiting for, I think, next week when Mr. Powell is due to appear in front of some commissions again. Furthermore, there were U.S. Government was saying that the Panama Canal could be open to U.S. ships without paying fees. Now the Panama authorities have come back and saying like nothing of the likes was decided yet. So that's another one to follow, because obviously they want the U.S. government wants to cut costs by all means anywhere they can, but that is not done yet. So we can see that all the things that are supposed to be happening are still fluid and are undergoing changes, and those changes we can see them by the hour. That's what we've been talking about already. If you watch those developments. And if you even want to trade those developments, you've got to be very careful, because hours can mean a big difference in what's going on with all the US policies. Over to, oh no, I need to mention something, and we'll have a look at Canadian dollar, of course. Trudeau yesterday came up, and I saw an FT article saying that he summons the business leaders to cut the dependence on the US. So that's a bit of an interesting one, and I don't think that it's going to help the Canadian dollar by any means, because how, as Canadian businesses, how are you going to cut ties with your biggest trading partners? I think there's a bit of water to flow under bridges there before they can even start to think about cutting ties to their US trade partners. Over to Japan. In between whatever goes on rates and tariffs, the Nissan Honda deal has exploded. Nissan notified Honda that they are pausing, but in fact meaning scrapping the deal for now. It's something that can have an impact on the Nikkei. So for those watching the Nikkei developments, even though we had a bit of a revival today, it did not really impact much, but it could have an impact on the Nikkei, because there are two very big companies in the Nikkei. So watch what's happening there. And then we go over to Tamura, the Bank of Japan hawk. He said that he expects 2 or potentially more rate hikes before the end of the second half of 2025. So starting the new fiscal year, and that's what I've been talking about when we were looking at the upcoming Bank of Japan meetings. There is one in March, and the next one is very early May. March is the end of the fiscal year in Japan, so I'm still doubting that they will move, but the hawk at the Bank of Japan thinks that there will be room for at least 2 more hikes before the end of this calendar year. And he also said that they will be thinking about the neutral rate once they have more information. But he did say that 1%, which is 50 bps higher than where we are now, that the 1% is not necessarily the neutral rate. So that was a pretty hawkish comment. That was what sent the dollar yen under that big 152 level, which we already mentioned quite a few times. We are rebounding now a bit. The dollar is rebounding in general as well. But that sent that dollar yen lower when he commented. So we will see what Ueda has to say about everything. But if you think about what the hawks at the Bank of Japan are thinking, they are not done. Okay, and we saw it in the short end. The 2-year Japanese yields rose to 77 bps on the back of it, and that's the highest that we've seen in those 2 years for the past 15 years. Okay, so that is what happened on and why the dollar yen went lower overnight. Closer to home, we also saw yesterday the ECB wage tracker coming out, and that pointed to a very steep decline in the expectations for wages this year, where last year we had a rough above 5%, I think, wage hikes in the Eurozone. Now they're expecting for 2025 that number to drop steeply to only 1.5%. Those are projections, okay? I mean, this is not a done thing, but if so, that would put the bar for ECB to lower interest rates more pretty low. And the hawks in the ECB, Centennial, and others were already out saying that they would like to see the ECB interest rates getting down to 2% sooner rather than later. Okay, and wages, as we know, is one thing that a lot of people, a lot of central banks are watching across the globe, not in the least Bank of Japan, as we also know. And that is a very big indicator for people at the ECB as well. Next, What do we have? Oh, if you're watching emerging markets and South African rand, know that Ramaphosa is giving his annual State of the Nation today. Sometimes it can be a bit of a mover. We know that there's again some issues raising in South Africa regarding Eskom potential power cuts again. So be aware of the state of the nation. If he says anything that could disrupt the South African rand today, don't be surprised if you see bigger moves. And then, yeah, Bayrou, the French Prime Minister yesterday survived a second no confidence motion, and so the budget can go through. He can start to work on the budget, but it's kind of fragile because the budget in France is not materially different from what Barnier came up with, and for which he has been booted out, at the end of last year. Now, the interesting thing here is that the right wing, or in France, which has had the most votes there, decided to allow Bayrou to go ahead. But again, if there are any hints that the budget may not be reached or that they would not uh, um, reach agreements on some expenses or so, watch out for those right wings because they could very quickly turn against Bayrou again. So I would say in the political situation in France, it is some kind of improvement because the budget has been voted, but it is all very fragile. Okay, so that's one thing that we need to keep an eye on going forward this year for France. Okay, well, lastly, in about half an hour or an hour ago, there was some article in the UK Express paper saying that Keir Starmer may want to axe Rachel Reeves in a big cabinet reshuffle. It's not. Well, we haven't heard anything from the man himself. We haven't heard any hints. So this would be a little bit of a bombshell if he would do so. We were debating the impact of this in the room. I'm not sure. Well, first of all, we don't know whether there's any truth in there, and then we're not too sure about the impact that it could have on the sterling. If there would be a lot of issues surrounding reefs, we could see it as a positive. But I'm not really sure today we could say that that's a positive. As a matter of fact, sterling is getting a bit host this morning, and that is likely ahead of the Bank of England, which I will come to in a little while. So let's first run through what's happened yesterday, and then we will have a close look at what's happening at the for the Bank of England a little bit later. Give me just 5 seconds to take a sip of water. Okay, here we go again. So first of all, yesterday we had a pretty negative trade balance in the US. There's a lot of temporary factors in there. So I guess we will need to look at how this trade balance evolves in the new year. It's also one that is going to be obviously very important going forward. It has been largely ignored, let's say, because people knew what was happening. But with all those Trump and his government policies, we will need to keep a very close eye on what is happening with the trade balances here and there, and especially the US one in the upcoming months, obviously. Then we had, we had the PMIs, the S&P Global coming out roughly. This is the final one where the prior ones were, the expectations were. Yeah, this we saw a slowdown in the ISM. Okay, in the ISM services, we saw a slowdown. It does come down from 54 to 52.8. The dollar had a little bit of a slap on it, but if you look at all the numbers, they are still relatively comfortably above the 50 mark. Okay, so we can hardly call these numbers bad numbers. I mean, if you look at what's happening in Europe, for instance, those numbers are still well below the 50 mark for most of the engines in Europe, at least. So, well, actually, I'm lying. Didn't the German one come out just above? Oh yeah, here we go. The German services were actually above. Sorry about that. Yeah. But even so, in the States, this is not necessarily. It could be the start of something, but we can't judge 1 month data. And especially, again, I'm going to repeat, whatever happens here, with all the data that we are seeing right now, whether it be still for January, whether it be for even December numbers that we see, they are all Trump's inauguration. I think for really to make a solid judgment about how the US is going to be affected and how the US data are going to be affected, we're going to have to start to look at data post-Trump inauguration. Okay, so all of these, as I said, can give you opportunities to enter some when the algos take it here or there, but I would not really hold these numbers to form a long-term view, because it is tough to now have a long-term view since we have this new administration in place in the US. Okay. We had some more data overnight. Aussie trade balance. I think it's rather a case of um, again, the Aussie came down, but it's not really on the back of this trade balance, nor the quarterly business confidence. It's rather just the effect of the dollar, and we will look at the Aussie and the Kiwi as well, because they stopped at interesting levels yesterday. Okay, Swedish CPI coming out, a bit sticky. We had one of the Swedish Riksbank's officials coming out saying that they're probably ready for a pause next meeting, and will be looking at the meeting after that to make more decisions on any potential more rate cuts to come or not. Then we had the construction PMIs out, and bit of a surprising drop here in the UK construction PMI. Well, surprising. I don't know exactly whether it's that surprising, but we'll have to look at those numbers in the UK. Especially with the Bank of England coming up. It if data in the UK continue to be a bit sluggish, the Bank of England could get more dovish as well. Today, I'm not sure, but in the upcoming meetings, it could be case that if those data don't show big improvements, and I would say especially growth-related data like this, for instance, we will need to take that into account for the sterling. And that is, yeah, we had the retail sales in Europe. A bit negative, but I mean, those were not really the market mover of the morning. Actually, they came out, and the euro dollar didn't really move too much on the back of it. Right, Bank of England. Okay, so the interesting thing about the Bank of England today is two things. We are going to obviously, well, it's mostly expected that they cut rates, all right? But then the first thing that we are going to closely have to monitor is the number of votes. Okay, last time we know that out of the minutes, it was clearly said that a lot were on the brink of. So we expect as well that most of them will now jump into it and vote for the cut. So as James already was saying in our room as well, this is Man, the one. If she would join the cutting crowd, that would be the dovish bit in this one. If in turn some of those people who were still hesitating last time would still be hesitating right now, and we could have something like a 6-3 for a cut. This will be inverted, a 6-3 or even a 7-2 may make us think that the Bank of England will not be as dovish as expected. Now, the second thing, and this is not noted here, that we will have to look at closely, it is a meeting with projections. And there we will have to monitor two things: what their expectations are for CPI. We have seen CPI come down pretty sharply of late, but and again, CPI is one thing, obviously, since the Bank of England is still relatively high in their interest rates. They're still going to be around at 4.5 if they cut today. But it's so inflation is going to be important, especially if it comes closer to 2% again. But I think growth here. We have seen a bit of anemic numbers there coming out for England, for the UK of late. And last projections, if I'm not mistaken, the growth was expected around 1.5. They could soften it down to, for instance, a bit of a range, 1 to 1.5, or but if they go any lower, or if they pin it to only 1% or go half to 1%, that's going to be seen as dovish. Okay, and that is the risk today as well for the sterling. And then I'm really not looking forward to that one. Half an hour later, and this is not on the calendar here, since it's a projections meeting. It's on the Bank of England page. I think we will have the press conference. I'm really not looking forward to that one. But anyway, and as we know, with Bailey, anything can happen. Against many assumptions, the last 2, 3 interventions he had, they were not as dovish. So the sterling actually benefited from it a little bit. But we know he can even kill the best of currencies over a press conference. So let's wait and see what he says, especially because there's the risk, especially if they talk growth down, I would say. So let's keep a very close eye on what they come up with growth today. Then we will have Mexican consumer confidence, but more important, and I'm scrolling down a little bit, is that we have the Banxico tonight, and there's a lot going on, obviously, between Mexico, the United States, China in there as well. They may be tempted to be on the dovish side, perhaps, because they've already said in not too many words, but they've already said that they are closely watching the tariff situation, how trade is going to evolve, to make decisions on interest rates. So I'm not saying that they will cut more than 50 BPs right now, but we will have to look at how dovish they will come out of that meeting today. So I think there's a bit of a risk here, and I guess the market and there we see the reaction for it, because the dollar mix did not really, after the first dump that we had after the postponement of the delay in the tariffs, Mexican peso did not really have that second leg in it that the Canadian dollar had, for instance. Okay. So we'll have to be a bit careful on the Mexican peso. If in turn they cut 50 BPs and say like, okay, we don't have that much room anymore because everything is still sticky, that may give a blip higher in the Mexican peso. But I'm not sure at this stage how long-lasting a blip higher in the Mexican peso could be, because the market is still very much on its toes for towards the Mexican peso. We'll have more job-related data out today. The Challenger job cuts, that it comes out right at the start of Bailey's press conference, and then we'll have the weekly jobless claims coming out. So far, nothing alarming, but we will have to see about that buyout scheme that is now started, where the government workers can decide to get paid until September and then leave the boat. We're not sure when this is going to start to show up. It could be too early for this one, but if we see a blip higher one of these weeks in those claims, it could be that some of the impact is starting to show, but to me, it's still a bit too early, perhaps. This one is always a one that the people are watching. But again, I'm going to repeat what I've been saying so many times. These are backward-looking numbers. Okay, these are really backward-looking numbers. We will have to see how all of this evolves once the new administration is in place. Okay, but they could give a bit of a move in the meantime. Canadian IV PMI never been a mover. I still think it won't be one today. We do have ECB's Nagel speaking later as well, and that and the Bundesbank Bowles as well is going to be on the wires. This could be an interesting one if he sides with the doves at the ECB. We know the German data haven't been great. We did see a bit of a pickup in the services PMI, but Nagel could be an interesting one for all things euro concerned later today. We also have Maclem. First reaction probably after the tariff saga that is ongoing. So we could see a bit of a move there towards the close of the market on the Canadian dollar as well. Right, I'm through for today on whatever has to happen. So let's go and have a look at what happened and what is about to happen. So we know the 10-year. Now, Bessent telling us that we have to look at it, so we have to look at it. We finally broke below. Yesterday, I said, I mean, it looks to me like we can go for a little move below here now, and we did dip below. We did see, sorry, the low of relatively low of the dollar just when we hit those lows, and then we've seen a little bit of a pickup again of those yields, and the dollar is picking up last night and overnight and this morning as well. So again, we are watching 447, 450, very important. I know that Dale is looking at 430s. This could be indeed where we come to stabilize again. As you know, my kind of overall neutral right now is more around this 420 zone. That is where I think that the neutral is for the time being. So this could be a bit of an overshoot. We could gradually come down to 420, 430. But of course, everything will depend as well on the differentials, because the differentials, as you can see, this is the rebound also of the euro dollar, but the differentials are not really picking up too much, in against the dollar, because when we look at other yields, the German yields have seen a little bit of a pickup of late as well, but they have been coming down. They have been coming down as well. If you look at all other yields like UK, Canada, Aussie, to just name a few, all the yields are coming down. So when you base a decision, obviously the US market is the deepest, as I always say. It has an impact on the dollar when those yields come down. But in a second phase, look at the differentials, because they are going to tell you whether the moves are somewhere viable. And as we've seen, the differentials have not significantly moved, so that may explain why the dollar hasn't completely fallen out of bed yet. Now, I was saying yesterday that we could have some tradable highs in the dollar of late, and I'm going to go. Well, first of all, okay, let's look at the euro dollar, but in a longer term. Look where it stopped yesterday. We were the daily cloud in the euro dollar came in at 104.40-ish, and that's relatively where we stopped. So this cloud may be relatively important today. It comes down a lot, so perhaps not that important because it came down basically to market, but it has played a role, okay, yesterday and the last week as well. So keep an eye on still where it is, because if we start already to cap the debates in euro dollar at 103.85, it could mean that people are watching the clouds. Okay. No, but where I'm saying, let me take that cloud off, is those lows, those highs, sorry, those spike highs in the dollar. Situations are very fluid, okay? And the euro is one of those which is still not out of the woods on the data. But if you look at a lot of pairs, and I will show a lot of pairs, we came to very close to very important levels, and we bounced from there in the euro dollar, and we came to quite important levels on a lot of dollar pairs. And I think right now this if we get a revisit there, even if Trump goes and well, if he slaps strong tariffs onto Europe, of course that could be completely different. But if it comes in the form of data or so, and we get back down there, I think it may be a tradable low here. That's how I look at things right now. And if you look at stuff like the cable right here, around here, this 122.70s or so, this spike low, we couldn't get down here, but it could also be we could go back if the Bank of England is a slightly dovish. We could go back down there or even down here. And a lot will depend on the Bank of England. But if it's the dollar side of the thing that will decide, this could be again, in my opinion, a pretty decent tradable low. And then if you look at the dollar yen, has had a tradable high around 156 again, 155.80, and then we moved back up to 155 and a half, and then we dropped again like a stone. Again, here, this could be a very tradable high if ever this bounces. Now, while we are on the dollar yen, we did go back down to 151.90 figure, even printed a low around 151.80, but it is still the level. The 152, give and take 20, 30 points, it is still a big level. So Tamura sent it down there, but we bounced here in the dollar yen, okay? So I think it's still a level that we need to pay very close attention to. Signs are, and we will see what happens during the meeting that Trump has with Ishiba. I think Ishiba is going to promise a lot of investments again. But if we come out of this meeting and dollar yen breaks again 152, I think we could see a deeper move down. 148. That'll depend on what the dollar does in the meantime. But I think at least 150 and a half, probably a bit of a test, potentially sub 150 is possible. Now, and also, and that was in the numbers last night, we saw, and I'm going to take those numbers back because it is pretty interesting. Oh, where? Okay, no, leave it. We saw actually, and those are numbers for past week, okay, and the week before. We actually saw quite a big sale in foreign bonds by the Japanese accounts. Remember what I told you about the Japanese whales when they decide to get out of foreign bonds and get more into JGBs. I'm not saying we are at the start of straight away because we saw big inflows in those foreign bonds the weeks prior, but pay attention to those bond flows, okay? Because they will have an impact here on the yen as well. If the Japanese whales decide to repatriate, your dollar yen will have a big difficulties to go much higher again, okay? Because it will have a bit of an impact depending on how big the hedges or the unhedging will need to be there. Okay, so there is one to keep an eye on now on those bond flows, okay, that the Japanese are doing. So that's about how it looks for the dollar yen right now. And look, I'm just wanting to say, right? Yesterday as well, maybe because this is the daily, I'm just going to take it out just for clarity of the chart here on the longer term. So to me, there was this zone here that I said somewhere 60 and a half up to 61 and a quarter. Again, we're coming back now a little bit from the highs that we saw, but again, I think this could also be a tradable zone. If we would get a revisit there, I'm going to be very interested. Um, that is something that I'm seeing on a lot of those currencies. And if you go into shorter term, all right, this is where we stopped. Yesterday, I said like, well, pay attention to this zone here, closer to 63, 63 and a quarter is really the level that I think will need to break to start to move higher again. And we stopped again around the 63. That is for the short term again, an indication that we're not completely out of the woods yet, and that we can see retracements potentially down to low 62s. That's all in the possibilities right now. Obviously, we have NFP as well coming up tomorrow, so that will be a big mover. So until tomorrow, we can perhaps be a bit more range bound, and then the market will start to move again. So for the short term, we'll need to have a look at what's happening around 62.90 figure and 63 and a quarter, and on the downside, low 62s. Okay, low 62s, down from 62 and a quarter down to 62. The figure I think is going to be a bit of a zone here on the Aussie dollar that we need to pay attention to for the shorter term, and then again a little bit bigger around that 61.70-75. If you look at the Kiwi, done pretty much the same thing. And again, there, I'm going to repeat all those pairs, all those dollar pairs have been seemingly the dollar high and the other currency the low, seemingly put in tradable lows for me. I said when the Kiwi broke above 56.60, I think there's a potential to go up to 57. That is exactly what we've done. But in line with what's happening on the Aussie, it's that 57 and a quarter, 57.30 that really needs to go for me to trade much higher. Now in a bit of a retest of the broken trend line, it is possible that we get back down to lower 56s, I think somewhere 56.30, 56.40. It is possible, and there, if this move higher should have legs later, we should start to find bids now in the 56, 30, 40 zone, in my opinion, in the Kiwi. Okay, that is where in the short term I think we should find support. Yeah, Looney. Okay, similar thing. Tradable high, not too far from that 2.618 of this setback here that we had August, September last year. And I think that it was also an extension of this move here, if I'm correct. I'm not sure. Was it? Yeah, was also there. Okay. But support also held, and that we're finding back in everything as well. Like whether it's the euro dollar yesterday, as I showed, whether it's the Aussie dollar, whether it's the Kiwi dollar, we also found support in the dollar Canada. 142.70. We have a range, I think. We have a range. So this 142.70 is the really the key to trade lower levels. And I think for now, this is going to kind of build a range. Will the top of the range be around 143.9510? It could be a bit in line with what's happening on the Aussie Kiwi, but we know that the situation in Canada is probably more fluid than Aussie and Kiwi, for instance. So I would say here we are not out of the woods by no means, and it is possible that we find also see a move back to 144.70. But it does appear to me that we could be starting to form a range here until we know more about the tariff. So to come back, Ali, I said 142.70, 143.9510, and then above there 144.70 are your levels to watch on the Canadian dollar. Okay. Right. What else do we have? Yeah, Mexican peso with the Banxico. It is less. I'm tempted to say that the Mexican peso has not. Yes, it saw the correction here, but has not found enough legs to tell me that it's over and we are going to go back down. It could do, but we need to get back below 2010, 2020 relatively soon if this is going to trade lower. Okay, obviously, even cutting the rates 50 bps to 9.5%, 9.5%. Okay, you compare that with any other central bank in especially in the majors, we are now topping out at 4.5 somewhere in most of them or lower. Okay, so it's still a high yielder. So it still could be if the situation calms down surrounding tariffs that the Mexican peso gradually starts to strengthen again. But it's it's very hesitant. So I'm not going to really take a side here yet, okay? And if the Mexico comes out any dovish, I would not be actually, I would only be half surprised if we get back to 2090, 21, the figure. That should now cap, okay? That should now cap. It goes back above 21 towards those prior highs. I think there's something more happening again, and we could find any edge up to that big 22 zone. So keeping all options open here, but I am not a big fan of Mexican peso. I tried it and I left the boat. Went right for one, went a bit pear-shaped for the other try, but it doesn't inspire me too much confidence right now. Okay, that is one. The Euromex is a bit of a different picture. Okay, it's a bit of a different picture because those highs it went to the top end of the resistances, and then the second time it stopped at the first resistance here. And people know my opinion about the euro. If I would at one stage try it again, I would rather perhaps do it on the euro mix, but I still will want to wait for what is happening on the side of the Mexican peso. And again, I'd feel more comfortable if we start to break back levels of, for instance, oh, sorry, I'm on the wrong one. And this looks really like the Euromix. This really looks like the Euromix. Um, so it stopped the first time on the bigger one, the second one on this resistance here. So it really looks like dollar red in a certain way. Um, so yeah, I think here this needs to get back down below 21.20 and stay there to for it to try again. But the picture is different on the Euromex than on the dollar mix. I wanted to say. Finally, I got there. So yeah, but the risk is the Banxico, and the Banxico could potentially put it back up there, up in the 21.50-60 zone. That is also very possible. Okay, that for the Mexican peso over Banxico. Anything else, guys? You're looking at? Just want to Euro sterling, Dimi, yeah, and Euro yen, yes, sir. Euro sterling. And well, I have to talk about the sterling, yeah, on the Bank of England. Euro sterling, we are trying to people call it gap filling. It is just a bit of a resistance here around this 45, 55 zone on the euro sterling. I think more importantly, depending on the Bank of England, is going to be this 83, 75, 80 zone. That's your gateway to trade back above 84 if the Bank of England goes all dovish. For the time being, I think it's the late longs in sterling are getting hosed a bit, and perhaps this um, story with Starmer not inspiring too much confidence. But let's see after the Bank of England. If the Bank of England goes all dovish, I'm probably not going to be too much in sterling right now. But if they remain a bit on the hawkish side, I think this is just a correction, and we could start to get back down. I'd love to see a move back below 83, 15, 20 to confirm that we are on the way back down. And then let's look at that cable, okay? I really thought we would stop around this 124.5 this morning, but I think a few stops got triggered here. There's an interesting zone, and I've been talking about that in our room as well. Look at here around 123.70, 123.80. There's a bit of a fib zone as well, low here before we did the last high. So this is going to be the zone of interest, I think, coming out of the Bank of England. If we close back above 124.50, 60, I think there is a potential for pushing higher again and possibly to 125.80, 126 maybe then on the cards, but it has to hold 123.80. If in turn we get down below this 123 and a quarter here now, or give and take 123, I think, yeah, it's going to probably mean that Bank of England went all dovish, okay, and then we will need to be very careful on all things sterling, all right. And then you guys are asking about the euro yen. We're in the zone. I've been showing this triangle as well. We're in the zone here, 157.35.50. If that goes, it's looking pear-shaped. My opinion about the euro, and now although the 152 test held in the dollar yen, it does look like dollar yen or all yen pairs are going to find sellers on rallies. It can move fast. It can hold the triangle, of course. Last time it did as well. And it can hold, of course. Uh, Perhaps this Trump Ishiba meeting will tell us something, or even the NFPs, if it's negative risk, can cause a break tomorrow. But here we have to respect the levels. Okay, we are right there on it right now. Yen is still strong. Watch what's happening around 157.5 with this one. It could be enough, and then we see a bit of a bounce, bit of a retracement up to 159 perhaps. But I would suspect that we find a bit of sellers on rallies in this one. Okay, and then to close all the debates for today, gold, silver. So the gold rallied yesterday and then finally found some sellers. It stopped shy of the bigger trend line up in the 29.10s. And now we are trying to, we retested the 28.50, which is the broken channel here. I've been saying also in the room, I do not like those sharp uh, channels. Okay, even if it's like a month and a half old, if you put it on a 4 hour, it's very steep. I'm not a big fan of those. So I would rather look at where it stopped before, and then you think about levels where actually is not too far, the 28.45, and then I would say here 28.30, and then 28.10. Those are going to be levels to watch if we see more corrections. Obviously, if we break back above the highs, if those yields continue to come down, for instance, I think then a move into the 29s is probably written in the book, and we have to expect it's still extremely big. I mean, even if you correct $30, we've done 300. Even if you correct $30, it can go fast. It can even go down to low 28s, even high 27s, and it would still not be in general a reversal. Obviously, reversals always have to start somewhere, but I'm not going to call a real reversal, unless we start to break back below 28s in this one. Then I'm going to think, oh, perhaps we are done. Silver, slightly different picture again, right? I told you about this 32.5, and that's exactly where we stopped. I took some more off because I want to play it on the safe side, and now we are back and even trying to get back into the channel. Which is exactly where we are trading right now. So keep an eye on that one. I will not exclude a move back down here into the 31s if we start to cap here around $32 the figure. Okay, so keep an eye on what's happening around 32. It can decide upon whether we go back for a retest, or if we get let's say anywhere between half a buck and a buck, correction is still possible, in my opinion. Overall, view unchanged. Short term, I'm cautious on this one. I always I'm a little cautious on silver because so much depends on what the reserves are, or the deliverables or so, and those things can change very quickly. So I'm a bit cautious on this one. Now, did you guys comment on something else? No. Okay. Well, that's it. There is an NFP. There is an NFP indeed. Let me just find the link here, Bran. Let me copy the link, and I know that other people have asked for it too. The link. Where is the link? Okay, give me a sec. Here. There is the link on the for the NFP competition this month. Just a quick reminder that you need to reply with your guesses to the original post, okay? No other guesses will be taken into account. Don't reply on LinkedIn. Don't reply on other people of the team reposting the NFP competition. Just only reply with your guesses on the original post. And that closes the votes for me for today, folks. Trade safe over the Bank of England. It could be a pretty decent mover, okay? Because there may be decisions to be taken. Have a great day, and we talk to each other again tomorrow. Thank you very much for joining me today.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.